Ladies and gentlemen, Matthew's here from Forex Traders. I hope you're doing great. I'm here with 7 reasons why 95% of traders lose money and end up failing. So for that and more, watch the rest of the video. Alright, great. So the stats that state that 95% of traders fail is often quoted, but it's important to note that the exact percentage may vary and is not backed by concrete data. Nevertheless, there are several reasons why a significant number of traders struggle to achieve consistent profitability in the forex market. So let's just jump into it right now and explore the reasons so that you can learn from them so you can avoid becoming the 95% of traders that are consistently losing money. All right. So what's the first reason? Lack of education and knowledge. Many new traders enter the forex market without proper education, understanding of how the market works. They may underestimate the complexity of forex trading and fail to acquire the necessary knowledge and skills to make informed trading decisions. Right? This is very common in the market, especially because of most of the times because of the influencers, the gurus that make trading look so easy, right? They make it so easy such that people may think that we just download money on the market, which is completely wrong, right? Forex trading requires you to actually have an in-depth understanding of the market, understanding of yourself, how you manage your emotions, and it's much more complex than what is put out on the social media. Remember, those are just marketing strategies to actually capture you into buying their course or their signals, right? But when you really go into it, trading is really deep. You really have to really study and invest in yourself, get the knowledge before you can actually start to see the results. So it's not about that get rich quick scheme that is actually advertised on Facebook or on Telegram or on Instagram, right? You really have to have the right knowledge enough for you to be able to make money consistently in the market. How many times have you jumped into the market without actually understanding what is happening? Because you saw someone out there making money and you thought you could do it as well, therefore you just got your last money and put into the account. Before you know it, you've blown the account. How many times has that happened? Right? That's very common. You're going to realize. So it's one of this is what's contributing to the 95% of traders that are losing money in the market, because we don't have, most people come in the industry without knowledge, without no background whatsoever, and they think they can just make money like that, and that's the surest way of blowing an account. So it's important for you to have the knowledge first, invest in yourself, get yourself a mentor, read, put in time. If you do it the right way, the upside potential is limitless, right? This is one of the professions where you can make money limitlessly, right? You can't be limited by anything. But in order for you to reach that stage, you need to have the knowledge. You need to know how you actually find your setups. You need to know risk management. You need to know trading psychology. You need to know how to manage yourself in order for you to become a consistently profitable trader. If you don't do that, I'm afraid you're going to remain in the 95% of traders who are constantly losing money in the market. So let's jump to the second one right here. Ineffective trading strategies. Developing a profitable trading strategy requires time, research, timing, testing, and some traders fail because they either don't have a well-defined strategy or they use ineffective ones. Without a proper approach, reliable approach to analyzing the market and identifying the opportunities, it becomes difficult to generate profits, right? It's really surprising to see people going into this market without proven data, without having an edge in the market, right? You are without a proven strategy that they've tested themselves and seen that the strategy work. That's the only way you can be able to make money consistently in the market. If you have a strategy that has been back tested, forward tested, and live tested, and that strategy has proven that it has an edge. And what is an edge? An edge is simply a higher indication of a higher probability of one thing happening over another over a series of trades. that strategy must have been back tested. You have the proof and the confidence that that strategy works. If you have that, it will be easier for you to actually carry on even when you encounter a drawdown. And like if you don't have the confidence in the strategy, the moment you just have 3 4 losses in a row, you go on to look for another strategy. Why? Because you don't have this, you don't have the confidence in that strategy. And that confidence only comes through back testing, forward testing, and having the proof that that strategy really works. All right, so make sure you do your research, do everything before you jump in on the chart on the real market right here. Make sure you have the confidence, you have the data that actually shows that you are able to make money consistently. Demo trade if you have to at least 2 3 months, so that you have the data that shows that yes, I am profitable and this strategy is profitable before you can jump in and actually put your money in the account, which you are always going to blow if you don't have a proper system in place. So make sure you have a strategy. You don't have to invent the wheel, right? There are countless of traders out there who are profitable using a profitable strategy. You don't have to create your own strategy. Learn, find the strategy that you're comfortable with, find a strategy that you resonate with, so that you can just learn from a mentor and then be able to trade like them, and like trying to go at it on your own, which is a route which I took, which was very bad and a lonely time of blowing accounts and a lot more. That all is unnecessary. Find someone that you resonate with, learn from them, and then that's how you're going to actually shorten your learning curve. That is extremely important, and I encourage you to actually check out our M&F Mastery course, the first link in the description, if you'd like to trade the way we trade, right? So the third one right here is poor risk management. This is extremely important, right? So successful trading requires effective risk management. Traders who fail often neglect risk management principles such as appropriate stop loss levels, managing position sizes, diversifying their portfolios. Failure to control risk can lead to significant losses and account blowout. This is very common. And if you can't manage risk, you can't be a consistently profitable trader. Unfortunately, you need risk management in order for you to survive in the long run, because there'll be times when you have losses regardless of how perfect your strategy is, regardless of how good you might be in terms of actually taking good trades. You are going to reach a time where you encounter losses, and the only thing that's going to save you when you're encountering such losses, if you are able to actually use proper risk management every time, know exactly how much you are risking on a trade by trade basis. That's the only thing that's going to save you at that particular point. So make sure that you are always knowing what you are risking on a trade by trade basis. For example, ask yourself before you take a particular trade, how much am I willing to lose on this particular trade before actually taking it, and really accept and internalize that risk, so that if you lose that trade, you won't beat yourself up because you had already predefined and accepted that risk. That is extremely important. Risk management is the only thing that's going to save you in the long run. Very important. So always use the position size calculator. Always calculate your risk before you actually take a trade, and most importantly, accept the risk. Because if you don't accept the risk, the moment the market starts just to go against you, you get out of the market because you've not accepted the risk. So it's really important for you to actually practice good risk management as a forex trader. Actually be a risk manager first and a trader later. All right, so let's go to the fourth point right here: emotional factors, right? So trading psychology, according to me, this is the most important aspect of trading, because you can have everything else figured out, but if your psychology is messed up, you won't make money long term. Yes, you might be able to make money on one trade, but guess what? You can't repeat that process over and over because your psychology is not well prepared. So you need to control your emotions. So emotions can greatly impact our trading decisions. Traders who let fear, greed, or impatience drive the action often make irrational decisions. Emotional trading can lead to chasing trades, taking excessive risk, or exiting trades prematurely. All these which can result in losses. right? So you're going to realize that all these things I'm talking about right here, all these are issues to do with emotions. If you don't learn to master your emotions, manage your emotions, you can't make it long term. Unfortunately, we can't eliminate emotions. Emotions are what makes us human. Therefore, we can never eliminate them. The only thing that you can learn to do is manage them. All right. And how? What are the things that you can do to manage your emotions? You can learn things like meditation, mindfulness. These are things that's going to help you remain calm under pressure. And that's the most important aspect of being a trader. Being able to remain calm even after taking a loss is a superpower, right? Because losing is an inevitable part of trading. You can never get rid of losing, right? Unfortunately, most people end up spending most of their years trying to find a strategy that never loses. Unfortunately, that's time wasted because all strategies actually go through losses, and losing is part of the game. And the best thing that you can become as a trader is a master of taking losses. Know how to lose, because ultimately the best loser wins. Very, very important point right here. So make sure you know how to lose, accept losing, embrace losing, so that when you lose, you won't revenge trade, you won't overtrade trying to make back that money, because you understand that over a series of trades you are going to be profitable. So there's no reason why you should actually cry about taking 2, 3, 4 trades, because that's just in the short term. That's extremely, extremely important. All right. So I hope you got that point right there. So let's go to the fifth one right here: lack of discipline and patience. So trading requires discipline and patience. Some traders fall into the trap of overtrading, seeking quick profits, constantly changing their strategy, and lack of patience and impulsive trading decisions lead to poor results, right? So trading is one of those endeavors where it requires you to be absolutely disciplined and be patient at the same time, because guess what, you have to wait for that setup to develop, you have to wait for the entry criteria to show up, you have to wait for the trade to actually continue to go to into your profit until it reaches take profit. All that is patience. So you need a lot of it, and you need a lot of discipline and willpower for you to be able to remain like that. Otherwise, if you can't do that, you can't make it long term, because there'll be times where you'll be tempted to actually over risk because you've lost 2, 3 times on the previous trade, right? And then when you have an opportunity, you might want to actually over risk on that particular trade. Without discipline, you do it, right? You just do that because you want to get back your money. But understanding that if you do that, you are going to actually go back again. You're going to let yourself down by doing that. It requires a lot of willpower for you to actually not to do that and actually focus and follow your plan like you are supposed to. So trading is really, really hard, and unfortunately, we are not equipped like that. And for you to have such traits, we have to inculcate those traits into us so that we become more disciplined and we become more patient. Like I've already said, things that can actually help is things like meditation, mindfulness. Those are going to help us remain calm under pressure and become more disciplined as we encounter these adversities which are faced on a daily basis as traders. So that is extremely, extremely important right there. So remember to have discipline and patience. This is going to help you big time in your career, right? So let's go to the sixth reason right here: unrealistic expectations. This is really, really big. A lot of us came to trading because we saw someone making money quickly. We saw some young guy out there, some 18-year-old, making a lot of money and showing off on social media without knowing how he was making that money. And then we were drawn into trading, thinking that we are going to make money as well, just like we've seen on that guy making money, right? So because of that, we come with that notion that we're going to make money quickly, and then quickly we realize that that does not happen. So many traders enter into the forex market with unrealistic expectations of quick wealth. They may be influenced by marketing materials or claims of overnight success. When these expectations are not met, traders become frustrated, lose confidence, and make hasty decisions that negatively affect their trading. Like I was saying, because of seeing someone out there making a lot of money in a shorter period of time, we come with that notion that we want to do that as well. Hence, we find ourselves revenge trading because we lose so much. We start to overtrade and we start to do all those things that we are not even supposed to do because we have unrealistic expectations. We want to get that Lambo, we want to get that Lorex, we want to buy ourselves a house, we want to retire our parents, and all those can be achieved in a long term, but not right now. But because we've seen someone doing it, therefore we want to do that as well right now, right now. Unfortunately, this has led to a lot more accounts being blown. And because you won't be able to actually fulfill these unrealistic expectations, guess what's going to happen when you lose a trade? You're not just losing 1% of your account, you are actually losing those unfulfilled expectations that you had, which is going to trigger emotional pain. How many of you guys have actually experienced emotional pain? Comment in the comment section, let me know. For me, I know I have, and it can be bad because I came with that mindset when I first started trading. Because of that, it will cause you to have emotional pain, which is really, really, really bad because of those unfulfilled unrealistic expectations that we had when you come to trading. So manage your expectations as you're coming to trading. Yes, you can make a lot of money in trading, but guess what? You have to put in work. You have to put in a really, really good amount of time. Make sure you're managing your emotions as a trader. Make sure you are respecting risk management every time. Make sure you are every time following your strategy. Those are the things that you have control over. You and I have no control whatsoever about what's going to happen on a trade by trade basis. So there's no reason why you should actually focus on the outcome. We can only focus on the process. So remember, process over outcome. That is extremely, extremely important. And the last one, right, what we have right here is insufficient capitalization, right? Especially here in Africa, right? Maybe it's like that around the world, but especially here in Africa, a lot of people don't have a lot of money to actually invest in an account and actually trade. Therefore, someone is going to deposit a $50, a $20, and they're trying to flip that into $1,000, right? And guess what? They'll fail 9 times, and that one time that they'll manage, and that's the part they're going to put on social media. And guess what you're going to see? You only see that success, that the successful part, and you won't see the 9 blown accounts. Unfortunately, that's how dark social media can be. So don't believe everything that you see out there. People can do anything just to trick you, just for you to actually get their costs and all that. So make sure you are aware of what is happening. Not everything that you see is actually true. Remember, do your due diligence and make sure that you are following the right thing. If you don't have enough capital, the best thing that you can do for now, and this is actually a blessing to a lot of us, is use of prop firm capital. So as long as you have the skill, you know how to trade, you can use the prop firms, which can give you a lot more capital with a small amount of fee, right? For example, you can get $100,000 in capital just by paying a $500. That is big, right? Instead of you trying to trade with $100, you can actually get a $5,000 to $10,000 with a $100 account. Or with $100 capital, you can actually get a $10,000 with some of the problems out there. So make sure that before you do that, make sure you have the skill, you know how to trade, and when you're going to do that, it's going to be easier for you to do that. Otherwise, capital is one of the major causes of blown accounts, because people are trying to actually flip accounts from a $50 account. They want to take it to $1,000. That's very, very, very bad, right? So inadequate capitalization can limit a trader's ability to weather market fluctuations and properly implement their strategy. Insufficient funds can lead to overtrading, excessive use of leverage, and increased vulnerability to the market volatility. So if you don't have enough capital, what I can advise is for you to save enough capital so that you can get a bigger account that you'll be able to trade. Otherwise, if you only have $100, it will be very difficult for you to trade that. It will be very, very difficult, and you're going to be prone to over risking, because you won't be happy if you made 1% of $100. But if you made 1% of $100,000, it's going to be a different story, because that's going to be a little bit more significant, right? So that's how it is. So that's the seventh reason why most traders lose money. Okay, so it's worth noting that trading is a challenging endeavor, and even experienced traders face setbacks, periods of losses. Successful traders often undergo a learning process, focusing on continuous improvement and developing the necessary skill and mindset to navigate the complexities of the market. If you've been following us for a while, I'm one of those mentors on YouTube and other social media platforms who actually show you losses, right? Why do I do that? Because I want you to come with the right mindset as you are coming to the market. I don't want to show you the unrealistic expectations so that you can have all those ideas, right? I want you to come with the right mindset so that you can actually become successful at this game right here. It's really, really important. And if there's one thing that you can know, is that you're going to lose. And if there's one thing that you can prepare as a trader, is become a good loser. Know how to handle losses, because losses are going to come and losses are inevitable. And once you have this strategy figured out, the next thing that you're supposed to focus 90% of your time on is your psychology. Focus on your psychology 90% of your time once you've had your strategy. Remember, there's no strategy that's going to work 100% of the time. Therefore, don't even try looking. Find a strategy that you're comfortable with and keep on trading that strategy until you are profitable. All right, and remember, if you'd like to be part of us, you like the way we trade, and you'd like me to be your mentor, the first link in the description takes you to our M&F mastery course. You can actually inbox me for more information. The links are down in the description. Check me out so that you can actually discuss on how we can help you. All right, you guys, I hope you found value in this video. If you have, help me out by subscribing, liking the video, sharing this video with your friends so that they know what they're supposed to do now for them to become a consistently profitable trader. You guys, I hope you found value. Until next time, goodbye.